How should you invest your money? Let me just let the expert tell you.
On all the money, what would you do with it?
Bunch of hookers and cocaine.
Oh, okay, that's not good.
Gotcha, but this is a serious video, I promise. We're gonna be talking about how to start investing your money. So my name's Alex. I previously was a quant on Wall Street, so I understand markets, I understand investing, and I hope this video makes you some money. So my first tip is kind of stupid, but also really important, and it's find a side hustle, make more money, and I'll tell you why. When I was in college, I had $1,000 in my investment account, and I would do all this research, read the Wall Street Journal, different articles, trying to optimize my portfolio, and at the end of the day, it didn't matter at all. So the reason it didn't matter at all is over the past 10 years, the top hedge fund, the top of the top, has returned 29% a year. And that's an amazing return. But for $1,000, that's just $290. So I was putting in so much work to optimize my returns when what I really had to be doing was just getting more money in the market. So find a side hustle, find more ways to make money that you can invest. And every $1,000 you invest this year, by the time you retire, is going to be worth roughly $17,000. So the key is just getting more money in. So my second tip is you need to avoid fees like the plague, right? So a lot of us, we start investing, we think it's super complicated, so we pay a financial advisor 1% to manage our money because we think there's super complicated stuff that they're doing behind the scenes. But these investment advisors do nothing except charge you fees. No offense, they wouldn't be your investment advisor if they actually had an edge in the market. They'd be hedge fund billionaires. So no advisors, no fees, it's a waste of money, but you don't have to hear it from me. Here's Warren Buffett.
Because costs really matter in investments. If returns are going to be 7 or 8% and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.
So the third tip is you want to diversify. Don't put all your eggs in one basket. So as a little story, one of the first stocks I bought right here is called Agora. It's down like 90%. Imagine if someone had their entire life savings in this crappy company. So you'll always hear Warren Buffett talking about index funds.
Index fund consistently buy an S&P 500 low-cost index fund. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund.
So index seems like a kind of complicated word, but it's really simple. All an index is a bunch of different stocks thrown together in one. So for example, the SP500 is the 500 largest American companies. So you'll see Google, Amazon, Johnson & Johnson, Microsoft. All these companies are in the S&P 500.
That's pretty interesting.
So when you buy an index fund on the S&P 500, you're buying 500 different stocks at once, all in different proportions. And the benefit of this is, again, if there's fraud at some company and it goes bankrupt, you don't lose all your money because you actually own 500 different companies, not just one. So you just want to find the lowest fee index funds and put money into it. There's nothing more complicated than that. There's no get-rich-quick scheme, unfortunately, and this is all you'll hear Warren Buffett talk about.
Buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin.
So you just heard the fourth tip. Don't try to time the market. If the market goes down, keep buying. If the market goes up, keep buying. You're never going to be able to perfectly time the market. The power of investing comes from leaving your money in the market for an extended period of time, and that's due to compound interest. So you can take a look right here. I think this is a pretty useful chart. Is if you put $1,000 in the stock market, assuming a 10% growth rate, in years 0 to 5, you're going to make roughly $611 in profit. But then you have more money in the account, right? You have $1,611. So over the next 5 years, you're going to make even more money, which you can see right here. You're going to make $983 over the following 5 years. So the power of investing comes from keeping your money in the market and letting compounding work its magic. So the fifth tip is look into tax advantaged accounts. So there are accounts called 401ks and IRAs. You may have heard these words before, and I'm not going to delve into all the specifics, but essentially there are certain forms of investment accounts where you can save even more money on taxes, which is obviously a benefit. So honestly, that's it. Make money, put it into a low fee index fund, and then just leave it. Set it and forget it. 99.9% of all other investment advice you hear is going to be absolutely BS and a get rich quick scheme. So this is real investing advice from someone who's been in the industry, and hopefully you found it helpful.